Yeah, I'm losing my edge.
Double outliers, the topic of conversation here today. Pete, I haven't come up with a good name for this yet. It's like the lightning strikes twice trade, or like like the double outlier is fine, but I need to come up with something that's like akin to like the word skew or something like that becomes a household industry standard name. But we're talking about double outliers.
How about the outer space of probabilities or something along that lines? Yeah.
Outer space?
Well, because you're going into that 5% of the time the market doesn't go there, but we're talking about the double outlier, twice the two standard deviation move, the 95% confidence interval, whatever you want to call it, moving to the fringes of the galaxy of probabilities.
I do like space. I know you like space as well. We'll workshop that, but
okay, we will, and we won't torture everyone to do it here.
We're calling it double outliers, and I want to bring up here in the first 6 or 7 trading days of 2021, we've seen a few outliers across multiple asset classes, and I want to talk about, after you see an outlier and you see a little of extension in that direction, what are you, supposed to do? What are the opportunities that are at your disposal there? And we're going to start with interest rates. Pete, small treasury futures are up 25% so far in 2021. That's 6 trading days here. Right now, we're midway through the 7th trading day of the year. 25% in a little over a week is huge for any market, even Bitcoin and yields, right? This is a big move.
Absolutely. It's, one of the great things of trading yield-based interest rates is they have this percentage movement that is great. We've built a product that's very small, so it's a consumable amount of movement.
Sure.
But 25%. I mean, I don't even want to go through these. So 7 trading days out of 252, annualizing 25% is...
Oh, I did it, baby.
Oh, look at you. Okay.
Yeah. At this rate, S10Y futures will close the year, at $107, and rates will be above 10%. And so what I just did there is what we saw here. So what we see in this chart really quickly is a rise from about $9 to just shy of $12 in that first 6 trading days of the year. Now, what that means is it's a rise between 0.9% and 1.2% if we're just rounding off there. Now, if we got that every 6 days, for the rest of the year here, we would be well above 10% in yields, or this index
you're the first
will have
one
gone
to call
from.
It.
I'm not calling it. I'll stick my neck out.
10-year rates by the 10s and the 10s by 12/31. I like it. It's an aggressive statement.
We're going to print the T-shirts up right now. But this is obviously I'm being sensationalist here, but it's just to let you know that what pace we're on. And there's also maybe this is another term that we use for this. It's just a matter of like too much too soon. You and I have been huge proponents over the last year calling for the normalization of yields, 10-year rates getting back to their average 2 or 3%, which would be $20 or $30 in these futures. That being said, you don't see a market just shoot straight for that 2% or 3% in a matter of a couple trading days, but we're on pace to get there probably in the next couple weeks, and then by the end of the year be at interest rates that I don't know if the 10 years ever been to 10%. It's not going to get there this year, but this is just it is a bit of that too much too soon thing, or outlier, however you want to view it, right?
Absolutely. This is, we talked about travel yesterday and the amount of back and forth within internet change and how important that is to an active trader. This is, I think we both found that at $11.40, this was an interesting extreme. Now here, so many things are giving us great examples of what we've talked about. Here's where your mechanics come in. We looked at this yesterday, and it's like, above 1160, I'm out. You would have been out of this trade today and then looking for another level. So the back and forth is critically important here. I think the context, I'm so sorry, of the 25% is the tradable opportunity here. Sure, we have a bias. What is normal? Well, the year before last year, it was 15 in this index. The year before that, it was 25. So have we just started the chug? Sure. But the one thing we know from whatever we look at, it doesn't go there. It doesn't go there straight away. So this is, for active traders, one of the probably not one of the greatest, but it is an engaging tradable opportunity. We're out of the 92 to 98, which we spent, you can see here, guys, 4 months within that range here. Now this is where uncertainty comes in, and we actually start seeing those daily ranges expand, but travel is important. Keep that in mind. That segment from yesterday was great. If you didn't watch Small Stakes, check it out, because Frank looks at the markets and did some research in ways that we don't usually do on Tasty Trade, but are really powerful in terms of back and forth for scalping.
Yeah, and so this is where I wanted to speak to a little bit, which is like the idea of over the next few months and years, rates normalizing, and that's the side that you and I normally sit on, as opposed to going through 0% and the outlier in that direction. But where's the activity as a futures trader or short-term speculator, just an active market participant in general? Well, it's the fact that we have these 5-day forecasts here from the Small Exchange. If you haven't checked it out, go to subscribers.thesmallexchange.com. It comes to exclusively Small Exchange subscribers. But what you see here, Pete, is the projection for S10Y futures for the whole week here, and we're already through the week's worth of range to the upside in the first couple of days. Now, if you want to view it on a short-term or long-term basis, whatever, we looked at it on a little bit longer-term basis here, where it's like, wow, at this pace, they're going to get to these levels that would be completely absurd, or 25% in a week and a half is a lot. Here's a little bit more shorter term. The main story here, the theme that we're seeing in S10Y, and also we can extend to metals and US dollar, is no matter where you think these markets are going in the long term, we're seeing short-term outliers right now, and that presents potential opportunity. Now, in light of Bitcoin's action and those crypto markets that seem to see outliers and then stacked outliers on top of those outliers, this market can absolutely continue higher. You can see the double outlier here, where S10Y blows out the upside in expectations and then does so again the next week. If that's the way you view things, then a long trade is in order. If you view betting against this lightning striking twice or double outlier, then I think getting on the short side of S10Y is in order. And it's the same with the long side in SPRE. You can see yesterday's close of 74.60 in SPRE futures, well below the whole week's worth of expectation here. And then yesterday's close in SFX of 144.10, already where we should be expected for Thursday or Friday of this week. This is the idea of, looking at that outlier and saying, I'm going to get on the other side of it because I don't think it's going to occur again, or ride with it because you think, hey, this is just the start. They're going to really build in some momentum in this product. Whatever it is, it's the double outlier trade here you're seeing in the short term, right?
Yeah, absolutely. And I think you use an interesting term, momentum. The idea that you're going to have these exponential runs. Now, you can say, Bitcoin went from $20,000 to $42,000. It certainly did, but within that journey, we went to 28 and back to 21. We went to 32 and back to 23. So the back and forth on these extreme moves, I don't think any of us, and there's not a lot of momentum guys left, because the markets do tend to price a little bit more efficiently in terms of whip. But the idea here of these three markets in the first 7 days providing you that as you're highlighting here, all the way out in terms of probability, those we're at those levels now. And I don't think, again, it depends on your bias, but I don't think you can miss these as contrarian trading opportunities as long as your mechanics and management stay in place. They are, what we're looking for is travel to take advantage of both sides of the market.
Sure.
And it's really, will an outlier follow? We know statistically it certainly can. We can move that third day by that move. But statistically, we always look, just go back to what we always talk about. How do I change the 50-50 static delta bet in scalping futures? Well, this is part of it. Statistics become an important part of building strategy, whether long-term or short-term. For us, a lot of it is short-term. Here's the perfect setups in 3 different markets if you want to take advantage of that.
Absolutely. And I just want to, go back to the last time we saw movement like we're seeing now in this product. And you have here, like, here's an instance of an outlier, and then, it's stacked another one on top of it. That's an instance of, okay, being wrong betting against the double outlier. But that second one, rebounded with a move in the other direction. And then you got an extension to the upside, a move in the opposite direction. Here, a big rise followed by a move in the opposite direction. That's what we're looking at here, is betting against the double outlier, which does occur. Like you said, there's an occurrence of it right here. But you see the other big moves in one direction or the other in S10Y here, usually found with a move in the opposite direction. And I like that you touched on the mechanics piece, because I want to go through these three markets here to close out the segment and attach some mechanics to it. Now, if you think you want to bet against the double outlier here in interest rates, it's a matter of coming in and saying, okay, it shot up from $9 to 11.5. I'm going to sell into that, the bet against the double outlier. And I'm going to give myself, and this is up to you, but I think what is reasonable is anywhere between 30 cents or $1 worth of movement on either side. Now, what does that mean? Maybe I'll just settle on 50 cents or 50 notional dollars on this trade. So if I'm selling 11.75, that means I'm getting out at 12.25, or I'm getting out at 11.25 for profits. Right. And that's it, and so in that way, you are putting that statistical advantage in your favor of going against the double outlier, which we've seen has worked a good chunk of times. But since it can, no strategy, no matter what anybody tells you, works 100% of the time. We know that. And so you have mechanics for it not working. And what's nice, Pete, is not only will you get more opportunities in that S10Y market, but it's the same with SPRE to the downside here, setting the same mechanics, whether it's 50 cents or $1 in that outright, and then also doing the same thing. Whoopsie daisy, I have two charts here. Hold on one second, and I will fix this. Doing the same thing here in SFX, Pete, which is, going against this big bounce that you're seeing in SFX futures and attaching mechanics to it. Now we have three unique trades betting against the double outlier, or betting with it if that's the way that you're so inclined, with mechanics, and you're hoping to just hit that 2 out of 3, right?